up, guys? Welcome back to River Rock channel. So in this channel, we talk about a lot of economic concepts. We also talk about trading, and also talk about investing. Basically, everything about investing and trading. In this YouTube channel, I'll be covering like every subject. So I wish you guys could learn, and I wish my content could really kind of add value to your life. So thank you guys for support. And if you guys love my content, please hit that like and also subscribe for my YouTube channel. So today in this episode, I will be explaining the very basic concept of technical analysis. Well, there are tons of technical analysis video uh, on YouTube, and I believe that you can all search for other materials as well. But in this episode, I kind of wanted to share all these kind of technical analysis knowledge and how you can adapt and apply all this knowledge and mindset to your trading and really kind of add value to your trading career and also be able to make money continuously. So these tutorial material is originally from Credit Suisse. It's one of their technical analysis handbook. You can download it online, or you can also join our group, and you'll be able to get a copy of these PDF. So I think to start with, I wanted to explain by giving you a sense of what technical analysis really is, because a lot of people been misusing technical analysis, or either they view technical analysis as the only important thing when it comes to trading and investing. But unfortunately, technical analysis is one of the very important tool, but it is not the only important tool. So if you wanted to have a successful trading career, you need to have both skill set. You need to have fundamental analysis skill, and you also need technical analysis, as skill set. And technical analysis basically gives you a very good, we call this like gatekeeping process. It also gives you a good timing tool, so you'll be able to really kind of time your trade and be able to look at how, the price movement, and you'll be able to better position your trades. You'll be able to have a better entry and better exit, and at the same time you will have a better trading results. So here we will start by introducing the basic idea of technical analysis. As you should all know about trend, because for every asset price it has the trend. So the trend is very easy to understand, but in trading terms we call this moving averages. We call this moving averages. So when you a lot of people who are apply to trading, they all know about moving averages, and I will be covering these subjects in the other half of the video. Perhaps like next episode, I'll be covering about moving averages. And also you need to know about momentum, because momentum indicates which is the price change, the rates of the change. You'll be able to feel if the market is changing quickly or if the market is changing slowly. Okay, and you also wanted to realize if the price action and also the price patterns really kind of indicate some flashing out or kind of trading signal. So you also want to know about patterns. For example, like Elliott wave is one of the very famous tool. So be able to understand the price structure, be able to understand the price movement. You start by understanding trend, momentum, and patterns. And all these three concepts, they are very different, and they explain about how price would move, and this is why you should know about trend, momentum, and patterns. So as you can see from here, this is a perfect curve indicating how an individual trader would emotionally go through from different mental stages. You will basically go through from caution, because when you're first investing, before you're investing, you're like you haven't have your mind settled down, so you don't know what to do, and then you will have a little bit of hope, hoping that this asset or maybe this stock will go up, and then you, if the stock kind of goes up, and then you will have more of positive uh, attitude, and then you therefore you're having this optimism, and with that optimism, slowly you're having this confidence, conviction, and then when the price hits record high, you will have euphoria, and then finally greed. And while a lot of people basically they lost a lot of money here, it's not because it's not that they can't make money in the stock market. It's because they were so greedy, so they still believe that stock price would, still go up further, so they didn't sell, or they didn't, close the positions, and that really kind of creating a lot of market losses for these people. So the reason why they are still bleeding is because they are so greedy. And then once you have that kind of setback, and then you lose a lot of money, and these kind of triggers our mentality change. We will start feeling denial, and then it will get worse, and we'll feel pessimism, and then eventually we're fair. All these negative energy will be around us, will be drowned with these negative emotions. Therefore, and then your trading accounts and your personal wealth will very quickly deteriorate it until you bankrupt. So this is what a lot of people go through. So in this curve, it kind of shows how people will react, because frankly speaking, not we're not like supercomputer. We are human, and human have emotion. We have our emotion, and therefore we will be subject to our actions. Well, it's very difficult to become emotionless. It's so difficult to get rid of bias. Therefore, we should always respect the market. We have to discipline ourselves to understanding how our mentality really affect our behavior. So that is one of the very important aspects of understanding technical analysis. And then here, as we can see this picture right here, here is the price chart. We call this bar chart, and that really kind of gives you an indication of open prices, the relationship between open price, closing price, and also with the open high, low, and low. You have different price set up in one day, so a bar chart would be an ideal presentation for you to really understand what really happened in daily trading. And here in the below, you start seeing these technical indicators, also including all these colored line. As there are so many different technical indicators. If you start using any kind of trading software, you can access Bollinger Band, you can access like RSI. There are so many different technical indicators, and we're going to explain all these different concepts in the coming episodes. So what is technical analysis? So technical analysis is the study of financial market action. So we look at the price actions, we look at how price change, we look at how individual will behave, and all these price would reflect our behavior. Okay, so a lot of price action will really kinds of happen before the fundamental factors, but sometimes fundamental factors will come before the price action factors. So as a trader, you have to understand when to apply technical analysis, when to apply fundamental analysis. So I'm not a big fan of idealizing all these technical indicators and analysis. But very important thing, you have like a million different kinds of tools, but you have to understand what tool will suit you the best, will suit the current market and status quo the best. This is something that you should pay attention to. So also technical analysis and the price action really kind of reflect how the crowd mentality would be. So when you're in a panic, people will be selling off their stocks and assets. You start seeing the stock chart going down and further, and that's how you'll be able to tell, okay, the stock is not a good condition, or maybe it's in the bull market, maybe it's in the bear market. And here, as you can see, this chart right here is this economy cycle we'll go through. So if we're doing all these technical analysis, it's very important for you to kind of go through. You have to understand in different market and macro economy setup, there will be economy recession, there will be growth, and there will be downwards. There are just so many different things covered in this economic cycle. In the future, I'll be explaining these the very definition of this concept. So fundamentalists believe that there is cause and effects, and there are relationship between fundamental factors and price change. So sometimes technical analysis could be driven by the fundamental analysis, and so sometimes they have very different correlation. So correlation is the term explaining the relationship between a stock A and stock B, maybe asset A and asset B. So when asset A goes up, maybe the asset B is going down, then they have a negative correlation. If the asset A goes up, the asset B also goes up, then these two have a positive correlation. So, and vice versa. And this is how we are applying fundamental analysis to technical analysis. So this is not technical analysis and fundamental analysis. These two things, they are not contradicted to each other. Okay, they are both very, very important. And here, as we can understand, and as we are trading the market, we're governed by two very different emotions. We're either being directed and motivated by greed, because we want to make money. That is truly why we're here. We're here to make profit. We're not here to lose money. But having the greed also mean we could have fear, because sometimes if you're taking the risk, you're taking too much of risk, you encounter fear, you feel very bad about it because you gamble all this money, and that kind of fear would kind of drive you crazy. So you have to be able to control and monitor your emotions, so you be able to control yourself and to be able to be mentally isolated from your portfolio. That is a very, very important technique when you are if you want to become a trader, if you want to invest and really kind of grow your personal account. And that is the key quality if you want to be profitable. So here, this is how the optimism, greed, and euphoria really kind of form, because as you see, the price chain trend really kind of govern our mindset. Because when we see this, maybe a watch, maybe a fancy watch, maybe a fancy bag, maybe a fancy sports car, we see these different asset price go up. Maybe we see Bitcoin, we start feeling that greedy. So it's very difficult to control, to really contain that kind of emotion. So this is something we should really pay attention, something we should practice, so we can be immune to the rapid changing of these emotions. So here, as you can see, this is a very simple bar charts here. There are 4 different bar charts here. There are monthly, weekly bar chart, and daily bar charts, and hourly bar charts. So what does OHLC mean? OHLC means O represents open, H represents high, L represents low, and C represents close. So it means in the bar charts you have a high low. That means you have a open high price. That means when the stock market today, you have a very high price, but that doesn't necessarily mean the stock is going to close at a high price. So sometimes maybe in the morning you start seeing the stock trading at $10. By the evening, the stock trading at maybe $15. By the time when it closed, and then it's trading at $9. So you have the highest open, which is 15, and lowest open, which is trading at 9. So this is how you determine the high and low. And open price, that means when the stock start to trade, you have an open price, and when the stock market is closing, you will have a close price. So a vertical bar charts is a very good tool because as you can see, it combines different kind of price factor. You'll be able to really understand you can see the open, you can see the close right here. This is the high and low, and here you can see the high open and the close low right here. So it's a very direct method that you'll be able to see. But so I recommend, if you want to, if you're a day trader, if you are you trade on daily basis and you want to know what happened in a shorter time frame, I suggest bar charts would be very good because it kind of tells you a lot of price information. But in a longer time frame, if we're talking about, if I am economist and I truly want to see the price in the longer and the in a more of macro kind of framework, and I will start by examining the basic line charts, because line charts, if you are looking at the if you are using the bar charts for longer time period, it's very difficult to see those high and low. But in the line charts, you'll be able to capture the patterns a lot easier compared to bar charts. For example, if you want to use Elliott wave, you want to use all these trading patterns, it's best for you to use line charts instead of bar charts. And here we'll move on to the last concept of this first introduction of technical analysis. It's very important for you to learn of the concept, which for the first concept is resistance, the second concept is support. As a good trader, you learn how to draw these two different lines, because that the resistance, for example, here when the stop prices goes up, you start to see this resistance because the stop price would hit certain line and then you will kind of go back a little bit. But it's incapable of breaking a certain price high, a certain price level, which is the previous high. So we will view this as a support. And right here, as you can